Welcome to Macro Hive Conversations with Bilal Hafiz. We aim to bring you the best macro analysis to help you successfully invest in financial markets. For our latest analysis, visit macrohive.com. Markets seem to be at a transition point, so the coming weeks and months will be fascinating. To mark this, we've decided to release one of our pieces from our high-end research professional service to our wider Macro Hive community. In this piece, I discuss why I'm changing my view on US rates. If you're not already a member, you can sign up at macrohive.com to get access to this piece, as well as our usual Macro Hive exclusives and deep dives, as well as our member Slack room. Your first month is free, and then it's only the cost of a few weekly cappuccinos. It's well worth it, and many call Macro Hive the hidden gem for investors. So once again, sign up at macrohive.com. We're also proud to have Moonfair sponsor this episode once again. Moonfair believes exceptional investors deserve exceptional returns. Returns like those offered by carefully selected top-tier private equity funds, an asset class that has been for decades out of reach of most investors. And given the current volatility in stock markets, the specter of inflation, low yields on most classic fixed income products, and the advent of all manner of unproven asset classes, Moonfair believes private equity has a place in every portfolio. No less than Fidelity International, the global arm of Fidelity, one of the largest asset managers in the world, recently selected Moonfair as its exclusive distribution partner for private equity funds. A confirmation of Moonfair's obsession with picking the best fund managers and strategies across private equity buyouts, venture capital, growth equity. Moonfair also offers funds from top managers running strategies related to co-investment, infrastructure, secondaries, and credit. And nearly 1,500 investors have trusted Moonfair so far with their money, and the company is hurtling towards 1 billion euros assets under management. It recently launched a new and improved secondary market in partnership with Lexington, one of the largest private equity secondary fund managers in the world, giving investors the flexibility to exit their position before a fund's holding period elapses. So to get started, please visit moonfair.com/macrohive. That's moonfair.com/macrohive and create your free profile. There you can also check out Moonfair's library of white papers exploring different topics around private markets investing, along with some of Moonfair's favorite episodes of the podcast. Completing a Moonfair profile is completely free and without any obligations, and will give you access to Moonfair's platform where you can see which funds are available, check due diligence documentation, and connect with Moonfair's Investor Solutions team. So I do urge you to go to moonfair.com/macrohive. Not least, it will allow you to get to see how many of the leading private equity funds in the world operate. Now, on to this episode's guest. I have returning podcast guest, Bobby Vedral. Bobby is partner and portfolio manager at Toscafund Asset Management. He is author of the widely read newsletter Macro Eagle. He has been a UK representative of the German Economic Council. And before that, Bobby was at Goldman Sachs, where he was partner and global head of market Strats. Now, on to my conversation with Bobby. So welcome, Bobby. It's great to have you back on the podcast. I always enjoy our conversations. You always bring a different angle to markets, which I really do appreciate. Now, I know you've been looking at a number of different themes, and I think one that I found very interesting from your recent writings has been your view on the backlash against big tech on all sides of the world. I mean, can you elaborate more about what you're thinking there?
Yeah, thank you. Hey, Bilal. First of all, thanks very much for bringing me back. I have to say the same thing. Always love it to speak with you. Look, on big tech, I think for me, the real move that will happen over the next decade, and it started 4 or 5 years ago, is what Branko Milanovic represented with the elephant curve, right? Basically that, the emerging markets have done very well over the last 20 years, so from 1990 to 2010. Those servicing and being able to benefit from globalization and from digitization have done very well. And the middle classes in developed markets have done very badly or not seen any improvement. And hence what we will see is a less globalization, a cut out of those who have done very well, and taxation of those who have been benefiting from this. And obviously big tech ranks very high on this. And what for me is in this very interesting is the biggest pushback I always got on this was that, but Bobby, what about the tech war going on between US and China? Why would they want to weaken their champions? And this is why I find it so utterly interesting how I would even say China started with weakening its own champions, with, which a very, very public crackdown, obviously, on Jack Ma and Ant last year. And I think when you look really at what happened at this 5-year planning session, where Xi Jinping was very outspoken about how platforms had to be reined in, that happened literally the Monday after Tencent received a warning. So they are cracking down on theirs. At the same time, I mean, we're almost accustomed to Europe doing antitrust investigations. And the narrative is like, well, yeah, Europe does that because they have nobody. But now you see the same narrative definitely start also creating in the US Congress. And that's the top-down pressure. And now add the bottom-up pressure. And you see that in, Uber here in the UK being the judgment that their drivers are not contractors or partners, but actually employees. That Amazon, obviously in Bessemer, we have the first potential unionization there. And then don't forget, I mean, the speech Biden gave last week about the infrastructure package was given from Philadelphia. He also announced his presidential run from Philadelphia, where when he did that, he said he would be one of the most union-friendly presidents ever. And if you really look at the people who have now joined the administration, so, for example, Tim Wu, who just joined as White House advisor for competition policy, very big tech critics. But in terms of, I have to say, good critics, right? From a point of view, it's like, guys, okay, they have to pay some taxes somewhere. And so I think here this combines with very interesting how also one of the first things Yellen did was to renounce Trump's insistence on a protection for big tech from the new OECD tax accord. And I do think that the 21% minimum corporate tax rate Biden is speaking about happens to be what they're speaking about at the OECD at this potential tax agreement this summer. So I'm just saying that, there is a crackdown coming, which I do think is not necessarily negative because, taxation will be certainly for the stock market short-term negative. But for example, more direct than antitrust act, right? And antitrust action could then be obviously splitting up of big tech, but that could obviously from an equity perspective not necessarily be negative, because you could argue that Amazon, for example, you probably get the books for free once cloud services have been properly priced. So I do think that from an equity holder you probably benefit from this, but we will probably see both. I think taxation there's definitely something coming this summer. And if you look at this OECD agreement they're working on, there's two pillars, right? One is the minimum effective tax rate, global effective tax rate. So I do think there's definitely something coming. And as I said, what I find very interesting is that both US and China are doing it in parallel to their own champions, which is very different to the US and to Europe doing it to champions they have where they have little skin in the game.
Yeah. And is the investment implication then to underweight some of these big tech companies and just overweight other sort of sectors? Or
yeah, I mean, absolutely. I think, I'm obviously pro tech, but probably very cautious big tech. Look, I have to also say, if you look at Tesla as an example, I mean, if I see, Elon Musk call himself Techno King as his official title now, then you really wonder. I mean, if this is a joke, fine. But if this is hubris, then you do know that this is probably peak. And for me, what is also very interesting, and obviously we have seen the Volkswagen story last month, is, and I followed that quite closely actually, that Germany was quite negative on EVs up until last year. And then the Volkswagen CEO, he was having quite a battle with his own union for pushing through the changes, which he won. And Germany is a little bit, once they decide something, they do it. But it's almost an all of society effort then. So this is not just like a CEO battling against the workers. No, this is the whole, I would say, the company and the industry and the nation turning. And then normally I would say, there's good chances that Tesla will now get serious competition. So the big tech, it's in general, later I think we will speak about Europe, but in general, I do think that the last decade was a lot about innovation or digital innovation in which the US and probably China exceed. And Europe is not very good at disruptive innovation, but Europe is very good at incremental innovation and at digital adoption. And now if you think of all the manufacturing and industrial expertise in Europe, then if we are really now in this phase of digital adoption, and then if you combine this with the whole climate technology and advantage Europe has, then there's actually real pockets of excellence in Europe, which is funny because on the macro level, everybody avoids Europe at the moment, right? It's so exciting in the US and China that why Europe? But actually, if you look at really company levels and you look at the very specific themes, as I said, like climate technology, and you combine this with digital adoption, there's some significant potential in Europe.
It's interesting that you're painting a positive picture for Europe because people, as you rightly point out, are always so negative on Europe, especially when it comes to technology. Now, some of the reasons why people are negative on Europe, at least at the moment, one reason is that they've done a poor job on the vaccination side. And as a result, we're seeing some lockdowns in some of the countries. Another is that, the US has multiple fiscal stimuli. The most recent one is the almost $2 trillion infrastructure one, whereas Europe hasn't really announced any new fiscal packages. So that's a second criticism of Europe. And then the third one is people are concerned about the politics within Europe. So whether it's Macron losing some popularity because of the lockdowns and some of the other things he's done, Germany's dealing with the post-Merkel world, Italy has Draghi. So those three topics, vaccination, fiscal, and then the political side, how do you address those?
No, look, this is, as we discussed before, this is exactly why the fund I'm building with my partner here is exactly we go long selected stocks in Europe and hedge the macro, because it's exactly as you say, right? There's some really nice, overlooked, misunderstood, undervalued stories in Europe, but you definitely have to cover the broader, the beta, basically, right? And so, but let's start with the word Europe. What is Europe? For me, Europe there are 5 Europes, right? There is the Nordics. It's a very different, very digital, very tech, very defense as well. Then you have the Euro North area, which is a very, collective industrial area. Then you have the Euro South or Mediterranean area, which again is more state-driven. And I would say in the short term, quite positive with Draghi. I think it will be a problem in 15 months when statistically speaking, he is out of power. But in the short run, look, there's 200 billion going towards Italy in the short term. And then you have UK and Switzerland, which are very different, again, opportunities. And then the fifth is Eastern Europe and emerging markets in the European area, right? So, Europe is actually full of different ecosystems.
Yeah, no, that's a very good point. Yeah, it's a bit like how people talk about emerging markets, as if emerging markets is just the same thing, where it's very different. Europe is very different.
That's exactly it. Most people, when they say Europe, they, I think of the EU or Eurozone. Which even if you look just at the equity markets is madness, because actually the biggest are the UK and Switzerland, for example. And if you look at just the UK story, I think is very interesting because, the FTSE on one hand, FTSE at 100 is a value story, right? Lots of mining, lots of finance, could be a very interesting recovery story. FTSE 250 is domestic, but then the UK just applied to the CPTPP. So, we have a very interesting potential economic area from Japan, Australia, Singapore, UK, Canada, potentially maybe the US joining or rejoining in the future. Very interesting. This could be very beneficial for the UK. So I would say, there is really very interesting buckets of stories, and you just have to pick the correct one. Right? Where I do think in many cases, but I agree with you, I do understand why people underweight Europe, because for the size of the market, say in China or the US, they only have to understand one government, the US or the Chinese. While in Europe, yes, you do have to understand 20 governments and their respective industrial policies. But if you do understand them, then that's actually quite a big advantage. And so I think in Europe, this combination of on-the-ground knowledge and of an industrial policy, plus how the political economy of these respective countries work in order to know which type of industry will benefit, makes Europe on one hand very difficult to understand, which hence explains this duality you just said, that how can you be positive if you're negative? It's like, no, I'm negative macro, I'm positive micro.
Well, I guess as an investor then, there's opportunity for alpha as a result. Probably more opportunity for alpha compared to, say, the US. One question, say, on Germany. Obviously, Germany is in some ways, the bellwether of Europe, you could say. What's your view on Germany? We have, Merkel. It seems like we can't settle on a successor to her. Every time you think there's a successor, it turns out not to be the case. The Green Party's popularity is rising. When you look at the politics, first of all, what do you think is going to happen on the politics side? And then secondly, is it important, for the economy and markets?
Yeah, look, for Germany, politics is definitely very important. It's the opposite of Italy. There, the politics doesn't matter, and, the country grows. Or not grows, but or given that the average life of an Italian government is 15 to 18 months, but still, Italy is, I think, 6th or 7th biggest economy in the world, tells you that obviously it doesn't matter too much. While in Germany, it definitely matters. We have now, while in Italy, average government lasts 15 months, Merkel is there for 15 years, right? So for me, the problem of the German system is it tends to happen with us, that we have chancellors for too long. Then literally the reason they also have been so long is because they killed anybody who was a threat. Hence, there is no real succession. And I do think here I would have guessed, or still at the moment, that the government in September will be Union, so CDU, CSU, so center-right, with the Greens. The Greens are a party which has grown up significantly. I would also say the Greens are, if you look at, they run the state of Baden-Württemberg, which is the state of Daimler and Porsche, and business is very happy with them. And if you think about it, now with Germany having done this massive turn to EV, well, that's what they have been saying all day long. Right. So the key thing is many now actually looks at them and it's like, actually, they have a plan and actually they were right. The good thing about the Greens, what I like is also when it comes to Europe, they are like, listen, guys, we have to either further integrate or we will blow up. And obviously they then say, but we have to integrate. Hence, we have to integrate. But what we can't do is this kicking the can down the road type of thing. So I do think they will be in government. The question is, will they be chancellor or vice chancellor? If they are chancellor, I think that's very good for the South because they will push for bigger integration of Europe. They're obviously very pro-European.
But is it possible for them to be chancellor as a smaller party?
Because to be honest, I mean, look, the biggest problem right now of the CDU-CSU is the corruption scandals. So we have obviously lots of stories at the moment of politicians who made money during the last year selling PPE to the government or being middlemen. And they're all, unfortunately or fortunately, whatever, CDU-CSU people. And that is going down extremely badly with the people. I mean, the vaccination adds to it, the vaccination rollout disaster. But this corruption is really what's hurting the CDU-CSU at the moment. And you could see the situation that if the current momentum of the collapse of the CDU-CSU isn't halted, then the Greens could have enough for a coalition with the SPD and the FDP, right? And then you would have a green, red, yellow. So it's possible. At the moment, I still would say it's going to be black-green, so Union with the Greens. And so the question is, if the Union provides the chancellor, I would at the moment guess it's Söder, the Bavarian, for the very simple reason that in the polls, Söder is leading to Laschet. And given the corruption scandals and the vaccination rollout, they really have a problem. They can't gamble too much by the CDU insisting they are the bigger party and hence should provide chancellor. And then you also have a historic precedent. When Kohl ran for chancellor, he let the CSU man go first. And the same thing with Merkel. Merkel let Stoiber go first at the first attempt to win the chancellery.
And does Söder have a particular ideology, would you say, or is it just more sort of details?
Well, look, I think at the moment there is always a little bit the game of, because obviously Merkel is personally quite popular. If they see it works, it's beneficial for the campaign to be seen as continuation of Merkel, they will do that. But they're clearly not. I mean, Merkel is somebody who grew up in the East. Merkel is very cautious by definition. While if you think about all the candidates on the CSU side were from the Rhineland, and the Rhineland people are, that's our industrial heartland. These are the carnival people, right? I mean, these guys are, way less cautious, basically, than from the East. And all of them were, right? Röttgen, Laschet, Merz, Spahn, all of them Rhinelanders. And so even if Laschet goes in, or if Söder, and we have a Bavarian, I think we will get a Germany that definitely is going to be different to the Merkel Germany. Also because I have to say, you do see now, and you see this a little bit with the industry and with the Volkswagen story, they are also waking up to the fact that, Germany needs to change. I mean, the last real reforms Germany has done was Schröder in 2000. In fact, Merkel has benefited massively from the Schröder dividend. She herself has not done really any major reforms.
The Schröder, you're talking about the labour market reforms he did.
The labour market reforms of 2000, absolutely, which were done, which cost him the chancellery. Right, which is why Merkel became chancellor. But at least he did the right thing. This is why Germany became so strong. I mean, if you look at the major measures, Merkel has done, she's seen as kind of, the statesperson, but ultimately, letting 1 million refugees in was humanitarian, but it certainly wasn't multilateral. I mean, she didn't ask anybody, neither at the European level nor the parliament. Buying Russian gas isn't very multilateral. I mean, all the Eastern Europeans hate it. Plus, it annoys the US. Switching off nuclear in 2011, Germany's up like 20-30% CO2 pollution since, because obviously we had to fall back on coal and one of the most expensive energy prices for industry. So overall, tell me one reforms she has done that has actually had the effect of Schröder's reforms. I mean, Schröder definitely has, given, for all his personal faults, which is closeness with Putin and blah, the labor and hence economic reforms is the reason Germany has been so strong in the 2010s. And Germany, I think, would say in general notice the weakness. And, I think the turn right now with the car industry is a very, very good sign. But you see there's pressure coming from below, also from industries like, come on, politics, you also need to wake up. We cannot just continue in this limbo state.
And do you think there will be more fiscal stimulus in the next German administration or not? Because that's always been the criticism of Germany, that they never do enough on the fiscal side, that they always want to put the fiscal brake on and all of those sorts of things.
Okay. If the Greens come in, definitely, or there is a good chance, the bigger problem risk is, especially, as you said before, like with Biden's second package and probably the second part of the second package soon coming, then the 750 billion in Europe looks pretty small and late. And so the big question is, and especially given the second and possibly third lockdown, most likely the South will need more money. And this is now the big thing is, this is why Draghi is so central, is if he can push through reforms and make seen that Italy is on the right way, at least in the eyes of the German public and German politicians, then the question is, how likely is it that a second or top up to the current European Recovery Fund is possible? Because I think that's the real question, right? That how possible is fiscal reform at European level? And that's why Draghi's position is so central at the moment. I mean, couldn't be a better person, but at the same time, it increases the risk. Because there couldn't be a better person, it's like, this is it. I mean, this better works out,
And you mentioned Biden. I mean, what's your bigger picture? What's your sense of the Biden administration? I mean, obviously, he's come in with a big bang, so to speak, with all the fiscal stimuli and so on. I mean, what changes should we expect from this administration?
Well, look, I think he clearly has learned the lesson from Obama that he knows that midterms are absolutely crucial next year. That's why he's going full in. He also makes big noise about it. So unlike Obama, who, pretty much did the Healthcare Act and then didn't really talk about it, like it's like, okay, next topic, right? Or remember how the rollout was a complete disaster. He now is like, it's through, let's talk about it. The next one. So in domestic policy, I think he definitely will want to make sure that people see he's on their side. And this is also why he's saying he's going to be the most union, because it's quite interesting. In the US, according, I think, Gallup poll this was, only 10% of Americans are unionized, but 65% support them. I found that a very astonishingly high number.
Yeah, I'm surprised by how high that number is.
Very high number. Which, it just shows you, though, in which kind of political economy cycle we're coming in, right? We're definitely not anymore in the 80s Reagan type of cycle, which we have been in for 40 years or 30 years. So I think domestically, and by the way, I mean, this is, he's just effectively fighting back from the Republicans who have become effectively the party of the workers, right? So he's going to go in there domestically, I think, very strongly. What is more interesting, but I would almost say domestically, it's almost very little difference, except obviously on the taxation front, right? That he will want to tax or clearly make sure that it's wealth which gets taxed. The difference is on foreign policy, interestingly, because yes, he might not be as aggressive in his talking as Trump was. But if you look at China, it's very interesting. So Trump really attacked China mainly on trade, but definitely did not talk about human rights and or environment. And I was always surprised by how not relaxed but calm China took the Trump tariffs. I mean, you never saw a boycott against American products, which, to be honest, if you think about it, right, in 2000, what was it, when Japan did the Senkaku Islands, there was immediately boycotts against when the Koreans put American missiles on their ground, immediately boycotts against Korean companies. Not a single boycott against American companies during the Trump administration. And now the interesting thing is with Biden, this is very different because Biden, actually his key points, human rights and environment for Beijing are considered internal issues. You don't touch them. So actually the relationship, I do think, is way worse. And if you think about this, how the Alaska meeting went, quite harsh, how they overall treatment is worsening. And it's quite interesting because we obviously, the Chinese have two very important centenaries, the 100 years of the creation of the Communist Party, which was obviously this July, and then the 100 years of the creation of the Republic, which is in 2049. So this centenary, on one hand, I would say, look, there's an incredible incredibly important anniversary coming up this summer. China overall, I think, will make utterly sure Beijing that the markets are stable in China, that we have no turbulence, except on any territorial issue. I mean, if there is something on Taiwan, this is exactly the wrong year to emphasize, I think, independence or anything that even smells like that. So from my perspective, which puts Taiwan into a very interesting position because, with the whole semiconductor shortages and Taiwan Stock Exchange has performed incredibly, Taiwan dollar extremely well. But actually, it's probably one of the hottest places in the world right now. Risk can change dramatically overnight. And, again, in March, we saw all these tension and then basically China finished it off with sending 20 planes into Taiwan airspace, which has been the biggest incursion ever. So I do think that here, Biden on the foreign policy, again, also for domestic reasons, will have to show that he is tough on China. But because of the core topics for him, human rights and environment are considered internal issues in China. That's why it's a very different tension to the one between Trump and Beijing.
Understood. And bigger picture, what's your bias on the investment side right now? Are you generally constructive on equities and regionally, which way you tilted, and bonds wise, are you bearish?
Well, normally I've been definitely bearish bonds and playing yields higher ever since, US was at 0.90. I'm just a bit concerned now about it because, everybody now says that, what a bad idea it is to be in bonds. But I still do think that, with all this Biden bazooka, that why should the 10 years not trade at 2? And the risk really becomes once the real rate crosses zero, then it becomes a real problem for real assets. And then obviously levels like between 280 and 3. But again, we have been at 3% in December 2018. So it's not that impossible. But those levels, I think, become really then a problematic for all the 60-40 risk parity portfolios. So look, strategically, definitely underweight on anything fixed income, long anything that the central bank or the government cannot print. So that includes equity, it's real estate, land, commodities, and tactically, I would say, I think April, the seasonality is just too good to be short, to be honest. It tends to be a very strong month. But then obviously we come into the good old saying, sell in May and go away. And if you actually look at it, it's true. In the summer, the likelihood is it will trade sideways. So I do think we might have a bit of a melt up now, but this is also the time, I think, to protection for the summer. So again, core portfolio, we're long, as I said, selected equities, but then we have macro hedges on both for equities and for yields higher. And I'm looking to add credit because credit is definitely, if you look at the US high yield, is at all-time lows now, the OAS and the yield levels. And I think there's definitely something that could be attractive there.
Great. No, that's excellent. We've kind of done a whirlwind tour. Now, if people wanted to follow your thoughts and analysis, what's the best way they can do that?
Best way is just go on www.macroeagle.com and just register for the monthly, where I just have my, in very short, my core views, and always very happy for any feedback.
No, that's great. And I'll add the link to the show notes, and I'd urge people to sign up for it. I read it every month whenever you send it out. It's not only does it have sort of good views and analysis, it's also very funny as well. At least you always have a couple of anecdotes towards the end, which definitely makes it an enjoyable read.
Perfect. Well, thank you so much, Bilal.
Great. Pleasure. Thanks a lot.
Okay.
Once again, we'd like to thank Moonfair for sponsoring this episode. Moonfair is now launching its Moonfair Growth Equity Portfolio, a product to make private equity growth and tech funds easier than ever for individual investors to access. The days of buying the post-IPO pop are over. Since the early 2000s, the typical time to IPO has increased from 3 years to 10 years or more, according to a Carlyle Group analysis of research conducted by Texas University's professors Keith Brown and Kenneth Williams. Their work found that investors in these private companies claim 80% of the value created, and Moonfair's growth equity portfolio allows investors to capture much of this value. Growth investors are one of the most interesting pockets of private equity. They target companies oftentimes that are making bold, futuristic bets that will redefine gigantic industries or invent new ones altogether. These products have also found product market fit and begun scaling rapidly, mitigating some of the risk of early-stage venture capital. Fund managers from EQT to BlackRock have launched growth-focused strategies in the last months. Moonfair is putting it at the fingertips of individual investors from minimums as low as $60,000 $50,000, or 50,000 euros. To get started, please visit moonfair.com/macrohive. That's moonfair.com/macrohive and create your free profile. There you can also check out Moonfair's library of white papers exploring topics around private markets investing, along with some of Moonfair's favorite episodes of the podcast. Completing a Moonfair profile is completely free and without any obligations, and will give you access to Moonfair's platform, where you can see which funds are available, check due diligence, documentation, and connect with Moonfair's investor solutions team. It's well worth it. I'd recommend you go onto the site, type in moonfair.com/macrohive, and then you'll be able to look under the hood and get to see what these private equity funds really are doing. With that, thanks for listening to the episode. Please subscribe to the podcast show on Apple, Spotify, or wherever you listen to podcasts. Leave a 5-star rating and a nice comment, and let other people know about the show. We'd really be grateful. Also, sign up to become a member of MacroHive at macrohive.com. We'll be back soon, so tune in then.